Well, happy Sunday, everyone. It is Shooter Scott Henderson. And hey, we're going to go over primary waves punch card growth stocks for August of 2024. Of course, at the end of our presentation, please do review our disclosures. Now, we have a lot going on in the markets. I mean, I'm going to say it's extremely complex, not just complex. And, we now have some confirmation that we're going to be looking at this jobs recession. Historically, it gets much worse before it gets better. That's going to play a significant role, I think, in how dirty it gets in the coming weeks. We expected last week some heightened volatility, but we still maintained a neutral stance. Now, I have to admit that was not aggressive enough with how much we came off. And the majority of the reason we had to sell off was unusual because of the jobs report. That was the main reason, we got that hit. Obviously, the Fed rate cut or not cutting contributed to that, as well as the additional economic data that we saw about GDP now, as well as information out of Europe, et cetera, et cetera. So all major indices are trading near the day's low with a little bit of a back test. As I was working on this article Friday, we just got to the video today. So markets are in a little bit of a mix. We may see a rally come around first thing Monday, but I would expect that to be sold at some point with resistance, and I will definitely post that in chat when that happens. Now, Monday, we have ISM non-manufacturing. Tuesday, we got trade balance. Wednesday, consumer credit, EIA crude oil inventory, and MBA mortgage application. Now, oil industry in inventories pop, and mortgage applications drop more than 5%, that will probably bring us down, as well as the consumer credit percentage. So I think the big day will be Wednesday. So Monday, I think we open, maybe get a little back test, maybe even a little push with a turnaround Tuesday kind of thing, and then maybe we flush coming into Wednesday on the data. Then Thursday, we get that continuing unemployment claims. That will be a big number. So either Wednesday or Thursday, that will hit us, right? So big earnings week. Tyson, Neotech, Carlyle Group, CSX, PLTR, Simon Properties, Realty Corp on Monday, means one that I'm interested. Tuesday, we got CAT. Now realize CAT and Micron are always two names I go to look at market strength or weakness. So if both Micron and CAT are weak, we expect that to follow. Uber, just got pummeled the later part of last week. So I don't know, maybe that's a candidate. I left it off my list only because I've not had great success trading that into earnings. So I saw stuff I saw better that was safer, that would more likely move that $5 or $10. But I still will be following that. Then we got Duke, Zoetis, Amgen, Airbnb, which I also going to be watching that as well. I may still put a position on there. I didn't like where the chart was. Then Fortnite, which is always a favorite of mine, SMCI, and DVN. Now I'll go more into semis in swing trade notes because there was a couple things that I noted there. On Wednesday, we have Disney, CVS Health, Hilton Worldwide, Rockwell, McKesson, Equinix, and incidental. Thursday, Eli Lilly, which I like, which is in spring trade notes, by the way. Parker, Heffen, Churning Energy, Datadog, which I actually like that, but the chart didn't look good. And I might go back and actually plug something for Guild as well. Then we have Trade Desk, which I liked and is in swing trade notes. And then Expedia, and I'm just noticing that I did not look at that, so I'm adding that to my notes to look at that for long. I don't know why it wasn't on my radar, but hey, it's what it is. Now, the technical take here is we're not done. That's the shortest way to explain that. A lot of stuff I had to look at. So, I think we likely extend to around 521. That's just, we're going to have this impulse leg. So, we could bounce off of this one all the way back up to our two. So that is the bounce I think what happens. Hopefully we open up weak and then we bounce. But I think ultimately that two is sold, is my thought. Now, I went over a little bit more. I'm not going to do that in this video, just to be timely. We went over VIX and the history of the VIX and where we are as far as spiking, whether or not we're going to continue up higher. Obviously we've broken that downtrend. So the next thing we'd be looking for is maybe a breakout of 34. That'll be what I cover here today. Also, market breadth is continuing to deteriorate. We threw in a Bloomberg write-up on that. And then I noted our notable 52-week highs and lows, just for your reference. Now, all right, so let's talk about AMTX. it's in trouble. Okay, it's below this 275. Don't like that. All right. It is a macro micro position trade, which I've had a challenging time analyzing this from Elliott wave because there's so much FOMO when somebody starts buying it. But I guess we did have a big seller. I'll have to refer to Kirk on more details there. I didn't have time to, jump into the micro and macro of that. So, but this is my analysis. All right. So, the thought is there's a bullish case, which hasn't really been broken yet. We really need to hold that 169. I would think that this is our low if we're going to continue to go bullish. So this 254 should be our low, and it just overshot a little. 1, 2, third can always do what? Overshoot and then go. So I'm still in favor of the bullish camp. Now the bearish camp, I don't like it because it goes, it becomes penny stock. We break down below this 169. If really that end of the world at $1 is viable, which is our low right off of here. So that means we would continue the downtrend. So this would be wave 1, this would be wave 2, this would be wave 3, this would be wave 4. And 5 becomes our longest wave, pretty much. Well, not quite our longest wave, because 3 was a pretty long wave. It can extend really way down out to about April, May of 2025, if it decides to do that. So that makes that a little challenging. Now, I didn't have time to look either. Boy, New York Community Bancorp either had a pop or it had a split, and I didn't notice it. So, but, the wave update really is simple. We put in this cycle wave 1, and it looks like our cycle wave 2 is done. So we should get a bounce towards about that $19. Obviously, we get back into this. I'm sure there's a gap there. I just don't see it on the weekly. But we get back into that gap, that gets troubling. So you break below there, that you might be a little conscious there. And that's sort of my thought. Now, AST Space Global, we could pull back significantly here from market weakness. Now, the count has pushed maybe 2216 with a back test of maybe 20. We're already below that range on this leg up, so it could just roll over right here and back test the breakout, and then we go. But this entire leg from here to here, as I ever look at these legs, I'm always looking at a shot 50% back, which happens to be right back down around $10. I hope it doesn't happen. But at this point, selling $20 covered calls, like I suggested up there, I know a couple of you sold 25s, was prudent last week. I mean, at least at this point, provided we don't get some additional pop. Now we can just build out this flag here till first of the year. I mean, really. All right, so that's my thought on AST Space Global. Now, Square, there was they put a deal on with Core Scientific, and it didn't pop on it, which I was sort of surprised. I don't know what's going on with that. Again, I didn't have time to jump into the macro micro because really my work revolves entirely around technical analysis. But yet, when micro and macro give me a good thesis that can play off of the technicals, then I go there. So I'm thinking we finally, we've been in this space forever, and it's, we're squeezing. We got more room to squeeze here to the downside, to be honest with you. So maybe we do get that vulture price of 31. Right now, I've got a new primary wave setup. The thing is, it drive 1, drive 2, and drive 3, so it should be done. I see no reason why that would continue lower. However, if the market is weak, if Mr. Market wants to, it can pull this down with many other names. So that's just the thought there. But I think at some point we find a base here. Maybe this is grouping 1, this is grouping 2, and maybe we get a third lower low here. And then we go, but I think it goes no matter what. So whatever you're structuring on your trade, just make sure you have room and time. Now, at American Semiconductors, we got trouble here. I left it bullish because if semis get a bid to the upside, this will switch back to the high side. And this will just become 1, 2, that'll be 3, and this will be 4, then we'll get to 5 up here. So it'll extend wave 3, which is the longest wave, and an impulse wave, that's good. So, that would give us some significant upside if that happened. But right now, it's telling me it's going to break down. We're going to get $19, then a back test of $24.56. So, two theses. Semis get a bid, and this drawdown or bear market potential here that we're looking at ends, and we get the dip buyers in and it fixes. Okay, it's done that right along. I guess it really depends on how long this unemployment information hangs with us. And obviously, we had some data points that we pointed out, which could continue that or extend that into at least this next week. Most of the time, Mr. Market forgets about stuff after 2 or 3 days, and most of the time within 24 hours. So we'll know Monday and Tuesday whether it's forgot about it, and then we'll know those data points, whether it's going to freak it out again or go the other way. But at this point, I would probably be trimming or selling some shallow covered, when I say shallow covered calls, monthlies, probably around 35 bucks. Because I can't imagine that we move from 21 to 35 bucks just to earn some premium where you're sitting and insulate yourself from the downside. Now, for a trimming number, I'd wait for the back test up to around 24 before I start trimming, because we're obviously well below that. You got another $3 back to the upside after this bounce. So that is my thought on American Semiconductor. Now let's look at Caesars. Nice pop. Nice wick up. Closed a little bit on the low side of the candle though, but still it broke above here. So now we're working on a double bottom, a higher low. Let's see where we want to go. We're going to find out if we get back towards 50 bucks. Then it gets above this 236. Then we're looking at back up to about 80 bucks pretty quick. Now, the difficulty I have with that is Bollinger Bands are extending. This is sort of grouping one, the downside grouping two, kind of a double bottom. And this is a higher low. So there's a good chance that we get a third drive over here for a bottom. It's totally viable. There's nothing that would prohibit that. So that's just my thought. So just be cautious on scaling into that at this point. All right, quick. We're in trouble. However, back test 921 should get a bounce. I know some of you have this position on. So now realize we're in trouble here because A and B is failing. So we've already slipped, it hasn't rejected this count yet, but it could become a vibe wave. And the problem with that gets us down around 5 bucks. So again, this is probably a name I would be selling some covered calls closer to 12 or 12.50 or 15 bucks, depending on what strikes they have. I don't even know. Again, I was so loaded this weekend, didn't have time to look, but that's my thought. But we get back above this, probably about 13 bucks, whatever this number is here, then it could continue to the upside. But we got a lot of room in these Bollinger Bands to the downside on this drawdown here. So my bias would be that we flip to the bear side, right? Now, we added back MP Materials, but I don't think our bottom's in yet. I think we got another about $1.50, $1.75 down to about 970 based on this flush. So unless we get a bounce to back above 50% of that candle, I would wait to do that before I added anything. But I wanted to give you guys a heads up so you could structure that for your entry as far as moving. Now, I added something this week because I spent a lot of time, really started Wednesday, Thursday, Friday, spent a lot of time last night. I got home late. Then it was 4 o'clock in the morning before I finished. Rolled out of bed about 9:30 today. Spent most of the day looking. Maybe it was convenient or not, but I hurt my ACL a little bit and my leg was hurting, so I wasn't walking. So it made me sit in my chair longer than I wanted to. So I looked at a lot of things. And I think it's prudent that we trim here or sell covered calls on names that look, right? AAOI, definitely weak, room to the downside. So I'd look at $8 covered calls. That's my 2 cents. Right or wrong, you're your own captain, so that's your decision. Whether you want to hold that risk or trim, note that we should, I'm wrong. I'm going to close above 12.10, right? All right, looking at Big Sky, I'm thinking, and I haven't, now again, when I'm busy and I don't have time to look at everything, macro, micro, I did not look at the options on Big Sky, but I would sell maybe $1.50 covered calls, which is 50% from where we are to the upside, because there's a good chance this breaks down with it, how long this is, really, which would create a broadening pattern to the downtime, and unfortunately, that's going to be pretty deep. That's so. Your choice. I probably would trim. That would be my thought there. Now, I noted I'm wrong on a close above $4. A lot of room to the upside there. I mean, there's just, we're in no man's land. All right, ENVX. Now, here we're just breaking down off of our two. I mean, I didn't note where I'm wrong, but oh wait, yeah, I did. Above 1875, so we have to get back above that high, but I didn't notice it. Now, wave 3 is going to be down around 321, so we got about 200%, 250% decline from here, or not quite that, 70%. Excuse me, I said that incorrect. And the way I see this is trend support down here on this red line. Tag 1, grouping 2, maybe we get a 3 down here, and then we pop. So unfortunately, the vulture price down there on that trend support line is only 3 cents. I hope it doesn't go down there. But, we should know. I mean, this trade down, if we get some support, it'll be at 78.6 off of this leg. So 78.6. Now realize I measured this entire cycle here, from this high to this low to that high. And the 78.6 is at 437 down here off of that. I didn't measure this one particular leg. But you can do that, of course. If that 78.6 holds, that might be where you take a shot. All right. Now, Generac. I would be looking at 160 covered calls right here at the breakout line because we got a price rejection right there. And this count has not reset yet. We get back above that. Let me go back to where I'm wrong. You know, one bad thing about this page is I can't see everything that I'm talking about, so I'm flipping back and forth. At least it's challenging for my memory. But I'm wrong on a close above 204 is what my numbers say. So that's quite a ways up there. I think we come down and we put a leg lower here, very much like we did here, right? We could just you measure this, the length, very similar in size. You know, history doesn't necessarily repeat itself, but it rhymes. So does Elliott wave. Right, so that is my thought there. Now, Planet Labs, I mean, nice pop, but it looks like a dead cat bounce to me, and we reject close at the bottom of the candle. So I think that's a right. You know, I would get pretty tight there and sell 250 covered calls. Not necessarily trim this until it breaks down below the 78.6 at 168. So you got about 45 cents to the downside, I'm thinking. But I clearly wouldn't be adding to this or any of these other names that I'm adding here until we have some confirmed divergent or some divergent lower lows on the daily, and realize we're looking at a weekly chart. And now on Planet Labs, I'm wrong on a close above 78.6 or 786 in that range. So now Unity covered calls maybe $25. I don't believe they'd be $29.59, but I went to that prior high is where my thought was. Count says back test, maybe we're going to go to become a penny stock. Notice where trend support is here. And basically this wick off here and here are the 2 points that I'm measuring. So this would be grouping 1 and this would be grouping 2 down here. So it could have, it could be a dollar stock again, just from that look. Now, I like Unity for many different reasons, and Kirk's probably holding the gun on the other side of my mic. Because he doesn't like me going here. But it's what the technical analysis is telling me, and that's what I'm here for, to make sure you guys understand. All right. So that's what we have for this week, folks. Great trading. Until next time.